Hi there, the dividend is back. ZIM is paying a new dividend of about 1% for the moment. They recently announced a cash dividend of 23 cents per share. That means a dividend of about 1%. While the stock price, as you can see, in the last year went up 66%. And of course, if you bought at the lowest peak in December 2023, when the stock price was about $6, your return would have been over 200%. Do you know why that happened? Well, because of freight rates. As you can see, in 2023, at the end of 2023, freight rates went down to about 1,000 or 1,100, and then they went up to over 3,000. Now, the good thing is that ZIM reported a lower freight rate. Let me show you what I mean. As you can see, the summary of key financial and operational results, average freight rate was about 1,400, so 1,400. This means that the new contracts that they will sign are likely that the freight rate will be higher as freight rates went up. So if ZIM signed more contracts with those rates over 3,000, then guess what will happen? The revenue will increase, also their free cash flow and earnings. This means your dividend may be higher in the future. But of course, as I said, everything depends on freight rates. If they stay high, around this level, over 3,000. If you believe this, that freight rates will stay around this level, or if they will grow even more in the future, as it happened back in 2021, over 11,000, then you know what will happen to the stock price. It will go up a lot. The market cap might go from 2 billion to 10 billion. And of course, you might see again that dividend over 100% or 50%. This can also happen. So there is still more room to grow for ZIM. They also improved their operations because, as you can see, compared to the last year 2023 Q1, and let's look back at the freight rates in 2023 Q1, were about 2,000. And then they went down to 700. So they were about 2,000. Of course, back then they reported the rates about 1,300, the average freight rate. Because as you probably know, this index is the Global Container Freight Index. If you take route by route, you will see other prices, other freight rates, with different prices. And that's why their average freight rate is lower. But if rates stay high around this level, over 3,000, or they might increase even more in the future, then it's likely that the revenue will increase more. And so your earnings and your final dividend that will get from this company. Moreover, as you see in this image, average freight rate, and look at this indicator because it's quite very important. They only increase a little from Q1 2023 to Q1 2024, from almost 1,400 to more than 1,400. So 1,390 and 1,452. So it's not a huge increase, but when you look at their operating income, you can see an improvement from a loss of 14 million to a profit over 160 million. And same for their free cash flow. It doubled from 142 million to over 300 million. And this is great because only a small improvement in the freight rate can bring you more dividends, more earnings, and of course, it also depends on their operations, how efficient they are. So this is great, especially for investors who bought this company back in 2024, at the beginning of 2024, the first quarter. And also in the past, in 2023, when I made a video and I said that the stock price is likely to double because freight rates went up and the stock price was still down, but then it has rebounded and went up, and that's great. Now if you read more about the report, you'll find that the net income for the first quarter was about 92 million, and this is great. Operating income was over 160 million. Then you also have to be aware of their debt. Their net debt is 3.11 billion. You have to be aware of this debt because if they don't increase their net income, especially earnings from operations, then they won't be able to pay the interest, which is quite high. For 3 billion in debt, they have to pay some interest. And if freight rates go down to 1,000 or less than that, then they won't make enough money to pay the interest. And this debt may be a problem for shareholders. Because imagine if this company doesn't have any earnings to fund their operations, to continue their business, plus they don't have money to pay the interest, guess what they'll do? They will come to you. They'll issue more shares. Investors buy the stock. But in the long term, you have dilution. That's why you have to be aware of their earnings and of course their debt, their net debt. Now, as I said, for the moment, they are doing great, especially when freight rates are high, over 3,000. So when you see rates over or around 3,000, ZIM is likely to do well. They can generate a profit, as you've seen the results. Also, their CEO said that the first quarter results illustrate the incremental benefits from their strategic transformation, as well as improvements in global freight rates. This is the most important. Improvement in global freight rates. Then, because of those high rates, as we've seen the chart, they also increased their guidance for the full year 2024. And they forecast between 0 and 400 million in earnings, adjusted earnings before interest and taxes. It's better to focus on this indicator, not adjusted EBITDA. Earnings before interest and taxes. This is the most important indicator. Of course, if you apply also the taxes, then the earnings may be lower than 400 million, around 200 million. If that can happen, then you know that will get another dividend, 30% of their earnings. And of course, everything depends on the future freight rates. If they stay high around this level, or if they grow more in the future, then your dividend, as I said, will be quite high. They also expect the delivery of new ships, and that's great because they'll get more efficient with their fuel. And you can see the most important indicators in this table. As I said, average freight rate, which has increased a little, total revenue, operating income, profits, and free cash flow, which is quite important. And don't forget their debt of about 3.1 billion. And as I said, the company declared a cash dividend of about 28 million or 23 cents per share, which reflects 30% of their net income. This is their policy, to pay between 30 to 50% of their earnings in dividends. Now, as they have so much debt, over 3 billion, as you can see here, over 3 billion, they decided to pay only 40% of their earnings in dividends. That's why. But imagine, if this company succeeds to make over 1 billion earnings or even more, because maybe freight rates will go up in the future, and they're able to generate again more than 1 billion earnings, then you can expect a higher payout ratio, about 50%, more than 40%. This means your dividend may be 10% or 50%. That can also happen, especially, imagine, if something bad happens, there is again a shortage, new wars, or something bad happens on the sea, then ZIM may be able to make more money because freight rates will go up, they may go to over 10,000, and guess what will happen with their profits? They will go up a lot. and so the stock price. You may see another rebound to $80 per share. That can also happen. But of course, in the long term, don't expect high freight rates. They are likely to be stable. 1,000, 2,000, something like that. Because if you look at the past, you can see that from 2016 to 2019, or 2020 better said, the freight rates were about 1,000 and something. Something like that, as you can see here. Only in 2020, freight rates have started to go up due to that pandemic and other problems, which created a shortage. And then, as pandemic has ended, the freight rates have started to decline. And you see another increase in freight rates due to other problems, the Red Sea, war, and who knows what will occur in the future. That may make freight rates to go up again. That's why when you invest in ZIM, it's like predicting the future, what will happen to the freight rates. It's better to take advantage of this company ZIM and invest in it when freight rates are quite low, at the lowest point, 1,000 or even less than that. For instance, in 2018, freight rates were about 1,000, as you can see here. And then they went up to 1,600. So that's the moment when to invest in this company. Take advantage. Of course, if you have another increase like this, then you are a lucky person. You can have more than 10x on your investment, plus a huge dividend, as it happened with ZIM. Now, going forward, it's up to you, because you have to be aware of the reward, as I said. What are the chances that another shortage will happen? Think of that. If you think that in the next months or this year a new shortage will happen, then you can take advantage and invest in ZIM. But if you don't think that, then freight rates may go down and be stable, around 1,500, something like that. But when that will happen, then ZIM won't be able to generate a lot of profits and deliver huge dividends. So that's why you have to know the upside and the risk. When is the right time to buy? And when is the right time to sell? Because if you don't sell at the right time, you might end up having a decline over 88%. Some viewers maybe remember my videos, my past videos about this company ZIM, when I was saying that the stock price is going down. And also back in 2023, at the end of 2023, I also said that the stock price is likely to increase because of freight rates. They went up, but the stock price was still down. So that was a good opportunity to invest in this company. And the stock price went up almost 200%. So now, if you want to invest in this company, the risk is higher. They are still making some money. They are paying a dividend of 1%. That's great. If you like it, if you are pleased with this return, then you might want to invest. But be aware that the X date is June 4th, 2024. So that's it for this video. And if you have other questions about this company or about those freight rates, then let me know in the comments.